It's Sunday, the 11th of August 2019. I thought I'd start by talking about the ASX gold developers and exploring type stocks that the last few videos I've done here have really focused on the producers, and left the sort of developers and explorers to the end because that's where there hadn't been as much interest, there hadn't been as much price action. But that's where I've really been putting a lot of my money in the last month or so, because I thought the way these things tend to work is that the majors move first, then the mid tiers, then the juniors. Juniors probably companies with a single mine, for example, and then it filters down to the developers and the explorers. And the developers and explorers are probably where some of the real gains can be made if this is the start of a proper bull market. So one of the stocks that I'd talked about many times here, and I've owned it for a number of years now, is Cardinal Resources. And they've had a really nice sort of breakout in the last week above this sort of downtrend here, and saw a nice sort of 15-20% move on Thursday and Friday on good volume. You can see here there's been that nice sort of rising volume trend after that big sale in June. They're gradually improving their project, and the metallurgy results and the definitive feasibility study are due in the next 2 months. So that's what I'm really focused on here, and I think that's this is a company with a $200 million market cap and a project of potentially 300,000 ounces plus per year production. And then you're seeing companies with there's not much of equivalent quality to this, and that production should come at relatively low cost, and there's not many projects that are able to deliver at those low costs as well. So I expect this to be a takeover target, particularly for goldfields. And so that's one that I'm really focused on here, and I've been gradually accumulating below this sort of 38 cents for probably the last 6 months, to be honest. And that's one of my core positions now, and I'm really expecting some action soon. And when it happens, it could move very quickly. West African Resources also saw 2 extremely good days, up about 15% in total on Thursday and Friday, heading back toward this sort of 5-year high. So around that 47, there's the 5-year high, and then there's this original high when they started hitting the high grade in 2016, about that 45. So it could be due for a little bit of a pause here, but again, the quality of this project versus some of the other, when you look at the producers that are getting 200,000 ounces a year and have short mine lives, and and then when you see something like WAF with extremely good costs, and assuming they deliver on that, obviously that's the assumption with some of these developers, this stock could be conceivably 50 to 100% higher than it is now. And I'm expecting it to keep moving here as if the gold price stays where it is and there's no problems with construction. Their mine is relatively straightforward. They've done a lot of drilling for grade control for the first, so the first year of production is not going to have as many problems potentially as some other mines. So open pit, tight drilling, seemingly well financed, and I reckon they might have been conservative in their financing as well. So little things like if they can come in under budget on the project spend, that will be a very positive announcement, I think, if that was to come. Probably a few months away from them being able to really predict that with any confidence, but I just feel like they probably were a little bit conservative in their financing and aware of the fact that other companies have had to tap the market again, and they didn't want to have to do the same thing. So obviously that's another one that I continue to hold. Echo Resources is interesting. Probably hasn't had the run of some of these others. I think there's probably a lot of shareholders here who are a bit beaten up and have been a bit annoyed at how things have unfolded over the last 2 years. But I think this still got plenty of legs, a lot of drilling to come, and that's what's really going to drive this stock higher. They need that drilling excitement. But it's a $150 million market cap now, so it's not particularly cheap. But I think there's in this market, this stock should be valued north of 30 cents. And I think that'll eventually come, but it might take a little bit longer than some of these others. Some of the smaller producers, Medusa is one that I have talked about heavily in the last couple of videos. Had a tremendous run still, back up to this 3-year high, similar to the match the 2016 high around 90 cents last week. I like the chart on this more than the company itself. I think that the performance of the company's been pretty average for the last few years, but they sort of spent a lot of capital and they haven't had to dilute shareholders. And I think if people want to get into this stock, it just means you get this real rocket, and that's what I talked about in the last video. I think just how fast it can move. Only 200 million shares on issue. On 200 million shares on issue, this is trading at a sub $200 million market cap when you're getting companies that are double the production roughly, but with similar sort of lower quality mines, higher cost, producing, with market caps of $1 billion Australian. So, this should not be trading. I think even if you get a premium for, companies that are operating in Australia and have two mines, they shouldn't be trading at 5 times the market cap for only double the production. I think there's a bit of a gap there. So I think Medusa could and probably should be worth $1.20 in that sort of realm, and that's before any production improvements, they've invested a lot of money in there in the last 3 years. And they're probably willing to, now they can start to reap some dividends from that and hopefully improve the mine output, which is the main constraint. So I continue to hold that, although I have taken it at some profits in sort of the mid 80s. I think there's just as a precaution. Same with Perseus, had a nice run, practically doubled from the 6 weeks ago. I think this is $1 billion market cap now, past $1 billion last couple of weeks. So it's a stock that I've always thought if the gold market was to really pick up, US dollar gold in particular, then Perseus is the stock to own. So that's why I'd been holding it and buying a position in that mid 40s and waiting for this sort of run, because it always has this tendency to be the best leverage to a US dollar gold move, and nothing's really changed there. And it's had a tremendous run in the last couple of weeks. Again, $1 billion market cap, is it worth that? I mean, I'm a little bit cautious that it is, and leverage is a two-edged sword. So if the gold price goes down, I expect to see Perseus probably hit one of the hardest of those stocks that have run. Resolute's interesting. It's obviously continued to move extremely well in the last couple of weeks and has really doubled from the lows. It was probably slower to move than others, but now it's back up to $2 here, and I'm very cautious here. I noticed they did a takeover of a operator in Senegal, and that looks like a pretty good buy in this environment. Decent, but they're going to have to take on more debt to fund that. And if you look at I didn't review their quarterly report in the last video because I hadn't issued it. But if you look at their actual results here, their costs at Syama sulfide extremely high still. Obviously, they're coming down as they ramp up the underground operation, but they've still being saved by the sulfide production costs. The oxide production costs, but they're falling away, and I expect them to be down, probably another 5 or 10,000 ounces the next quarter. So those costs are not going to be maintained at the oxide at that level, but they really need that Syama sulfide to pick up because they are burning cash at the moment. And if you look at Ravenswood, they're losing, even at an Australian dollar gold price at 2,200, they would have been losing money last quarter. Or this quarter, last quarter they were burning $500 an ounce there. They burned through $5 or $10 million at Ravenswood, and there's not really anything in here to indicate that's going to pick up anytime soon. And there needs to be a significant amount of money invested in Ravenswood for the performance to pick up. And they were trying to sell it, so they're trying to sort of have it both ways. They know it's not a good mine. We know they were trying to offload it, but then they talk in these presentations, they show it, with these flashy production figures and stuff like it's going to be turning around, but that just isn't happening for mine. You can see here just net cash down 20 million, and huge. You can see here that any operating cash flow from Syama was, offset by the Ravenswood operating cash flows. $10 million there. A lot of development costs, drawing down on more debt. That's they're treading water here, and they've got I think about 200 million in debt at the moment. So I'm always cautious when companies use takeovers of others to sort of paper over their own cracks, and I think that's potentially what Resolute are doing here. And I'd be very cautious about owning it here. I think there's a few warning signs in here about recoveries at Syama sulfide as well. They really need the recovery to pick up. And they're sort of blindly saying that they expect it to happen, but you kind of wonder if there's still a lot of risk here, and I'd prefer to own something like Perseus, which is probably a bit more bland, but Resolute pushing a $2 billion market cap, a $2 billion enterprise value at the moment in Australian dollars, and that's too much for mine, so I don't want to own it here, and I'll continue to sort of steer clear of it. I think when there's a lot of other opportunities here, I don't want to take on company risk as much as I can anyway. Dacian back up to sort of its highs after the plummet. I think their quarterly was actually not bad, and there was a few positive signs in there. I've highlighted a couple of things in here. We knew what the production numbers were in this, and I talked about that probably in the last video, the one before that. But the positive thing is here that the open pit operation has really improved. They'd been talking about they expected this grade to come in, and it was always sort of, it was kind of, it was staying sub 1 gram a ton, and they were expecting it to happen to pick up, and then it actually has. So I think people were, I was a bit surprised by that, because after all the problems they've had, I was skeptical that they were actually going to be able to deliver that number, and they have. So they've got to 25,000 ounces there from the open pit. So that really supports the base of the operation, I guess, and now they can really focus, assuming that's maintained, which it seems like. I think now that's into a high grade ore for some time, they can really focus on the underground a bit more. But the underground's having huge problems still. The grade obviously lower there, and the ounces as well. Not getting much development ore, so I'm not really haven't gone into the detail of this report, but it seems like they're still having problems with development and getting the tons they need at the grade they want. So that's an issue. But in this market, it's still undervalued, and I expect the gold price rise in Australian dollars in the last month or two has really helped them, and will probably mean they're not going to need to do a capital raising, I think, although they might still want to do one if the opportunity is there, and shore up their balance sheet so they don't. There's no possibility of them having problems paying off their debts. So it's been a decent recovery, but they're still underperforming, and there's still a lot of shorts in here, and I think they'll probably get hit harder if the gold price rolls over. But that potentially could be a buying opportunity, I think, if Dacian was to fall harder. And I think I'm sort of still following it and still own shares, but I haven't been buying any more. Silver Lake Resources, I think in the last video I talked about how I was worried about the upcoming quarterly report being not necessarily indicative of a company with $1 billion market cap. And the production numbers are quite good actually, but the upcoming guidance for FY20 I think showed the high costs, and potentially maybe the market didn't expect that as much, but they haven't really changed their tune here. They've always been a high cost company, and I expect that to continue. High cost, relatively high development capex as well. So that's a problem, and I think that sort of spooked the market a little bit, and you saw the stock come off. It's underperformed the last 2 weeks. It's sort of had its run early, and now since then it's been struggling. It's probably one of the weaker looking charts among the mid cap stocks. And then they've obviously used their overvalued scrip to purchase Egan Street Resources as well, which is a company I've sort of briefly followed in the past and owned shares in a couple of times, but didn't at the time of the takeover. But when companies do that, they know their script is overvalued and they're using it. Maybe that's also showing the market what the company thinks of the value of Silver Lake script. So that's I still probably think that's an avoid here, and one that I'm sort of steering clear of. Ramelius has done extremely well. If the last video I talked about how I'd purchased stock about 70.5, I think I got in actually on this low here. Sold too early, sold it at $1.10, but that's how I like to trade generally. I'm trying not to pick the tops here, trying to get the sort of bigger moves in the middle. But obviously that's doubled from in the space of 4 weeks, so even less. And that's a tremendous move. And I think one of the rationale I had for buying Ramelius is that it was undervalued relative to Silver Lake, for example, and now that's kind of it's now they're both overvalued in my view, so I don't own either. But I think this there's money just flowing to certain stocks here, and it's coming in too quickly and sort of ignoring the fundamentals here. So again, I'd avoid Ramilius. Gold Road, another one which I can't fathom how it's really trading at these levels. And especially since not only it's trading at a $1.5 billion market cap, and they don't even have any production yet. So um, that's I think it's going to be a good quality mine, but is it $1.5 billion company for 100 to 150,000 ounces of production? I don't think so. So that's why I'm not owning it. But this, it's especially this breakout above 140 the last couple of days looks extremely toppy. So I'd be cautious there as well if I owned that. So yeah, that's those three. I know that they're all overvalued in my view, and my strategy is to wait till they become undervalued. I'm not going to chase them here. Um, I know a lot of people own those stocks, but it's not. I think you just got to be cautious and aware that they can be a little bit overvalued. I think are quite overvalued, really, potentially sort of 30% ish. Northern Star, they're sort of leading the charge of these the sort of larger mid caps now. I guess they're almost a large cap gold producer with their production. I think about 800,000 ounces now, but they've underperformed in the last couple of weeks as well. So had rallied early, and then have the quarterly reports come out wasn't that positive. A few nice things in here. The Pogo acquisition looks like it's kind of delivering a little bit better results. They've been able to turn that around somewhat, but still the sort of jury's out. But the stock had run up heavily in advance of that, so I think it wasn't necessarily a sell the news, but it's priced in already. So I'm not sure what's going to be the next catalyst. And some of the other larger cap Australian producers also, the charts look quite toppy. Evolution showing, hasn't topped out the same way Northern Star, almost trading at the all-time high close there again. But seeing some quite large wick candles here, some big down days. Probably not a stock I'd like to own here as well. Those large cap, and even Newcrest has seen a tremendous move recently, so I'm kind of avoiding those as well. So there's not a lot of value here in the Australian gold producers. Hence why I'm sort of looking further down the categories toward the developers and explorers. But even some of those are getting pricey. Regis stock has also taken a tumble. I talked about that in the last video. I think their quarterly had already come out, and they've continued to kind of underperform some of those other mid caps. So yeah, again, it's kind of an avoid for me, and I'm just the company risk in some of these, and I think we're still in that X growth phase for a lot of these stocks, stuff like Regis, and they at this point I think is when they'll start using their script to buy others. We haven't quite seen that really take off. Northern Star has been a little bit more aggressive, but Regis and Evolution, Saracen have kind of been biding their time, not done any major deals, a few little takeovers here and there of smaller producers, but I think now we could see, I don't know what the next move is here, but these stocks are kind of, I think, reached the limits of kind of the organic production growth, and they've got rising cost profiles generally. So there's a few headwinds. Obviously, there's a big tailwind in the Australian dollar gold price, but that's kind of priced in. I think $2,000 gold at least is priced into some of these stocks now. So, it's hard to find value, but I think the caution I would have here is that in these market pullbacks, especially in a real bull market, you'll get these pullbacks will be very very severe, and particularly given the run-ups we've had, you could easily see 20 or 30% pullbacks in the space of a couple of weeks in some of these stocks, and that's you really got to wait for your opportunity. And I think this is a real bull market, but in a bull market you do get more vicious pullbacks generally to shake out, shake the people who have been jumping on. So just be aware of that, and use caution in some of the investments, because I think we're reaching a point now of sort of short-term euphoria among gold bulls, and that's what I'm cautious of. I read a lot of stuff with these same people involved, so I'm trying to bide my time, have a bit of patience, stick to undervalued, particularly in the smaller and developer stocks as well, where I think there is some value still, and then and try and wait for an opportunity, and it will come. There always comes an opportunity. Even in 2016, there was some really good trading opportunities um, to buy back into these stocks. So just be aware of that and use some caution. And I'll do another video update in a few weeks or whenever there's some more interest in the gold market. Thanks.